Right. Okay. We can start now. So thank you everyone for coming to this particular breakout room. I promise you it'll be a good. It'll be a good session. We've got two really experienced and strong senior leaders of their respective organization. Let me introduce to you Peter Kennedy, interim CEO of Hmlet, Asia Pac co-living space operator, and Mr. Bruce Wells, Managing Director of Asia Pac for Matterport. Hello, hello, hello to both. Um, as you can see, the breakout room is centered on the topic of work from WFH to WFO and to digitalization of physical spaces. So questions are these trends here to stay? Has COVID truly interrupted physical spaces? What's this new normal or new different, whatever? Peter, can I get you to give a quick short intro of yourself first?
Martin, I don't see Peter in the participants. I wonder if he's still in the main.
Actually, you are right. Okay, well, let's do this, right? So Bruce, over to you first.
All right. So yeah, for a quick introduction, hi everyone, my name is Bruce Wells. I'm the Managing Director for Matterport Asia Pacific. I'm based, well actually I'm currently based in Hong Kong, although our regional headquarters is in Singapore. Yeah, I guess as we go through today, we'll be talking, I'll introduce Matterport to everybody and talk to you about some of the exciting things that we're seeing in this transformation of basically the digitization of property and what that means for basically all stakeholders. And we'll share a lot more about what that looks like.
Yeah, Peter, Bruce, while we're waiting for Peter to come in, why don't you share with the audience how, you know, we spoke last year about how Matterport was so relevant despite the lockdowns. Can you share a little bit about what happened last year?
Yeah, can do. So I'm wondering if it's worth just taking like 1 minute to explain who Matterport is and what we do, just so that there's a kind of everybody's got a underlying understanding. So actually, I tell you what I'm going to do. I'm going to use some technology, since this is what it's all about, and I'm going to show you, hopefully through my background. All right. So Matterport we're a technology company that basically enables our customers and partners and ecosystem to very easily capture, render, and create a 3D digital twin of any built space. So we do a lot of this in the real estate world, but also in construction, engineering, architecture, insurance, and a variety of other industries. Basically helping to take and transform any physical property and construct a 3D, dimensionally accurate 3D digital twin of that space. And going beyond just the virtual tour, as you can see behind me, in addition to that, these are dimensionally accurate models. So you have the ability to extract 3D data assets, take measurements, be able to engage with the property as if you were virtually or if you were physically on site. And this opens up a whole bunch of new and exciting use cases and opportunities for our clients. And in addition to that, one of the big plays, not surprisingly, is in the going beyond the virtual tour and looking at the digitization of what we see. So contextual understanding of these spaces. So being able to do object detection, recognition, and then using our Cortex AI engine, being able to extract additional value for our clients from the Matterport spaces. So that's probably the fastest intro I've ever done of Matterport. If I talk to you a little bit about what we're seeing in terms of the change with COVID and what this means for, let me just go back to my other background. Give me 1 second. There we go. I mean, clearly, with travel impacts, people not being able to move as freely as they wanted, whether that be internationally or even domestically, we're seeing this rapid adoption to using digital technologies to continue to drive businesses forward. Probably the easiest example, what we're seeing is in the real estate space. So anybody who's got property that they're looking to sell, lease, or leverage in terms of a promotion of that property, being able to provide a digital twin of that is allowing transactions to take place where historically, if I can't get on site, can't physically view it, I'm not going to buy, rent, lease, etc. And we've seen a large number of transactions taking place around the world, sight unseen, because if you can provide that kind of true, authentic experience. So Martin, to your question about, what are some of the things we're seeing? I mean, that's just one example, is how digitization of properties is actually changing the way businesses are engaging in operating. And again, I think through this breakout session, we'll share a number of use cases. And I this is not something where it's going to go back to the way it was. I love the expression, necessity is the mother of all innovation, because that is what we are all having to do now, is embrace and leverage the environment that we're in. And it's spurring on new innovation and new adaptive ways. I mean, even for us, looking at how companies have embraced our technology in areas that we hadn't even possibly considered, or we didn't expect the adoption to be as great as it is.
Absolutely. Thank you, Bruce. Now that Peter is back, you talked about use cases. I know that Hmlet has employed Matterport's technology. Peter, can we get you to share a little bit about yourself and Hmlet?
First of all, about myself, for those that don't know, I come from Burda, which is a family-owned business in Germany. I've been with the family more than 20 years, running a bunch of their operating businesses and JVs. The last 3 years I've been with the CBC based in Singapore, and I'm the senior advisor to the principal investments. And over the last few months, I've been seconded to Hmlet to take a look at what can be done there. Burda is very much an operating VC, so we actually spend a lot of time with our companies. I wouldn't say we're turnaround specialists, but we've turned around 4 companies in our portfolio that were almost at the point where they had no runway. One was called Vinted, which was a P2P fashion, and we stepped in 2016, and we looked at their business model. They were going upside down. Thousands of people were fleeing the platform, and we flipped the business model. And to cut a long story short, we just did a raise that values them at over $1 billion, and GMV this year will be $2.7 billion. So that's one turnaround we did. We did another turnaround called Not on the High Street. That was a Etsy type platform in the UK. We were an early investor in Etsy, so we kind of knew a little bit about it. And we've increased the EBITDA by more than 52% at NOS. In both cases, in Vinted and with NOS, we replaced the management. We put in our people. We worked hard. This year, NOS will make about a £15 million profit. And the next on my list is Hmlet, where we did an analysis of what went wrong, what happened, and the steps we have to take to turn it around. And that process is now complete. And in fact, we've just had a series of internal meetings on the learnings that we've had. What we do is we put these learnings in a deck, we send it to our HQ in Munich, and then we have about 20 people from our investor team go over it, and we draw our own conclusions, and they make their comments, and then off we go. And that's the way we operate. I think we know the levers to pull for Hmlet now. We know the mistakes that we made. They were quite a few, but we ignored a few principal, not orders so much, we had some principal values of starting business, which is never believe that you'll always be able to raise money. 2, control your burn. And 3, be disciplined. Stop doing stuff that doesn't work and focus on the things that do work. And through that process of being disciplined, then you can usually find the the answers to being able to start growing again. And we see that evidence. We have work to do in various areas, in marketing, tech, understanding the business model, understanding pricing. We didn't have a pricing model or revenue management model. We're now building that out now so that we have more dynamic pricing so that we can find equilibrium points between occupancy and average selling price on a room. We're working on enhancing the website to make it more responsive, to make it faster. So there are a lot of things that we're doing to turn the business around, and we feel pretty confident that the ship's off the rocks and the engines have started and we're making headway.
Very interesting, Peter. I know you spend a lot of time on Hmlet, but you know, Hmlet being a co-living space operator, it's almost like the Gen Z way of saying serviced apartments, service residence. How is you know, how is co-living becoming a trend?
Well, I think that the first place that I started was to see whether this was a thing or not. Is co-living a fad? In fact, when we did the investment in 2019, I was out there waving my finger saying, I think this sounds just like another fad. Anyway, we did the investment. I've been involved since November, December, but one of the first things I wanted to look at was I looked at all the other co-living operators around the world, and I tried to look at the macroeconomic aspect of it, which is, why is co-living a new real estate asset class? Because that's what it essentially is. And it arises because if you look at the data, the disposable income available for people within our target groups, the 25 to 35-year-old young professionals, they are spending today 40% of their disposable income on rent. When I started work, it was 15 to 20%. So it's become unaffordable. And they're not the only segment we've discovered that have this problem of unaffordability. There are lots of other segments out there that we're looking at, multifamily. In the States, Commons is looking at lower income segments. So the whole idea of co-living is really to use technology essentially to be able to provide an offering to people that are no longer able to live the way we lived 20, 30 years ago. And in the case of the millennials, provide not only a complete package where they literally all have to do is sign the lease and move in, all the way to memberships, member experience, community, and all the rest of it. And this, we don't see this going away. We see new segments in the space actually developing. In the US, the Commons, for example, is looking at the lower income space of people who are severely rent stressed. And if you can be efficient, if you can do procurement, if you can get good leases and get good pricing from landlords, because if you lease 500 apartments, you get a far better rate than if you lease one. And that spread, and it's an arbitrage game at the end of the day, that spread allows you to make an offering to people and a value proposition they could never have on their own. And that's why I see this asset class as continuing to expand.
Thank you, Peter. Now switching gears a little bit to Bruce. So Bruce comes from Matterport. Peter, Hmlet has used them. Another of our co-working space investment has used them as well. What are you seeing on the ground, Bruce? Like with COVID lockdowns, are you seeing a lot more space owners coming to you and say, hey, digitize my space because I still need to sell them?
Yeah, absolutely. I mean, the world still hasn't stopped spinning because of what we're dealing with, and there's still a need. People still need a roof over their head. They still need to have a place to go to work or have a business, and certainly a place to reside. That's for sure. So yeah, we're certainly continually getting companies that are coming to us and looking for innovative ways to differentiate their product, their offering in the market. And one of the things that is a common theme with it, it's not just about pretty pictures and kind of creative lighting. It's creating an authentic, engaging experience that builds trust and translates the brand into that buying experience. This is not about kind of fish-eyed lenses to make the living room look distorted and large. If you don't provide an authentic experience, and it is funny, I talk to landlords and companies that have large property portfolios, and they'll often kind of say, well, can we distort this, or can we make this? And it's like, well, you're missing the point. You're using this to create an authentic and genuine touch point with your potential buyer, leaser, renter, et cetera. And you need to do that in that genuine way. And Martin, the interesting thing about this is this isn't going to go away. Like, once travel opens back up and people can get on site, why? What's the point? If I can get on site virtually and do it in a trusted way with a brand that I'm engaged with, and be able to go back whenever I want, take measurements of whatever there is, inspect it as often as I want, share it with my potential roommate or partner, why would I want to schedule it next Thursday, 2 o'clock? No, that doesn't work for me. How about the following Wednesday? No, that's not okay. Well, what about, and then, forget all the amount of time wastage, and nobody wants to do that. And I think, my final kind of wrap up on that question, Martin, is that this is to me the silver lining or whatnot, is that we're forcing ourselves to rethink what we used to just do as kind of common practice.
Right. Peter, are you seeing that same level of impatience from your members? People want it now. I want to see it online, and I just want to move in.
Yeah, there's no question that today's generation want to do things very quickly and not have to wait for anything. And we try at Hmlet to develop a quote unquote seamless experience. So once they've come on the website, they show an interest, we say, download the app, and then you can do everything on the app that you need. You can see the apartments, and using Bruce's technology, they can have a look at all kinds of stuff, and we intend to use more of it going forward. They get an idea of what it looks like, and then they can literally book on the platform. We need to make that process a lot smoother than it has been. We did a few silly things like insisting on bank transfers, creating an enormous headache in administration and logistics, when we could simply have said, oh, why don't you do your deposit on your credit card, and then we know you've paid, we know when you're going to move in, we can start the process going. So there are a lot of simple little things that we've been doing that make this whole thing much more efficient. But the idea was, oh, let's make everybody do bank transfer because we save 1.5%. Well, we spend 3% on extra accounting people, we lose time, we piss people off. And these are the things that you learn by mistakes. And learning by mistakes is something that we use a lot when we do our turnarounds. What are the mistakes that we've made, and what have we learned from them, and what are we going to do to correct them? And through that process, we've turned around all these companies, and we expect to do the same in Hmlet.
Right, you talked a little bit about management. So actually, the other question that we had was, the pandemic last year. I was on a webinar with Bruce. It was real. We were all stuck at home somewhere. Has seen some startups being badly affected. Some have thrived, in fact. But can you share with us some of the hacks that took you and the team through this tough period? Maybe Peter, you want to share a little bit first?
Well, hacks that took us through the tough period was, I think...
Apart from wine.
That's the one I use the most. It seems to work with me very well. So I think that, first of all, the macro picture has improved. I think we went through the great panic of the depth of the epidemic last year. Nobody was doing anything. So to a certain extent, one hack really was that the market has kind of begun to turn around. The second hack, of course, which was super important, was we had to look at our burn rate. And we've cut our burn rate by more than 50% since December. and we plan to go even deeper, because we had a situation where we had a lot of money and we spent a lot of money, and there was this belief we'd always be able to raise a lot of money. And this is not the real world. So we had to cut a lot, which we did. We had to streamline quite a bit, which we're doing. And I think these are obvious hacks, really. So there hasn't been a bit of magic that we've done. It's all been basic focus management type of attitudes to get the business moving in the right direction again.
Right. And Bruce, I know you had a different set of issues. I've spoken to your colleagues in the US, and we spoke about how up to your neck you were last year. Share a little bit about your hacks.
Yeah, obviously our situation is very different in that our business has been thriving with COVID, based on what we've been talking about in this. But if I think about some of the hacks, we've, as you know, Martin, I met you on my kind of first month, I think, with Matterport 18 months ago. We've had to hire, we're hired about 20 folks now across 4 countries. Most of the folks I've never met. Most of the folks haven't met the other 19 folks in the business. And so it does force you, I wouldn't necessarily call this a hack, but it does require you to really think about your many things that differently. So the culture of the business and the people that you're hiring, because you're going to have to rely on people working remotely. You're going to have to rely on things, you can't create that tribal knowledge and just put your arm around somebody and says, here, let me show you how this is done. So a couple things I say that I wouldn't call them hacks, but things that we've had to get really disciplined on. Being able to work independently and being an awesome communicator. Because if you're working remote, you got to be able to communicate in a more effective way. Certainly, as Peter said, focus on what works, get rid of the stuff that doesn't. For us, we're in a hyper growth situation, so it was also focus on what works, but also get working on what's next. But probably the big learning for myself is that set some goals on what you expect, even if they're a little bit opaque about that next thing, and then be truthful to yourself about what you're going to jettison and why you're going to continue with stuff. I mean, you're going to have to pivot and move and do all of that. But I think what's this is causing is everybody just has to be a lot more disciplined as operators with a business, whether it's in a growth perspective or a turnaround. You just have to be much more disciplined than any other time in my career that I've experienced.
Yeah, certainly you talk about being tribal, being able to put your arm around someone and say, here, this is how it's done. And certainly at Genesis, we feel that as well. At least for a good part of last year, we've been very transactional with each other. Every time we get on a Zoom call, it's 10 o'clock. They're not on. What's going on? What are some of the learnings, or your experience into how to bridge that gap, really, to feel less transactional and kind of bring back that virtual water cooler sessions or wine sessions, what it may be?
I don't know, Peter, do you want to go first on that one, or?
Well, I heard wine mentioned, so I think that one of the things that I learned very early on in life, being in the military, was that no plan survives first contact with the enemy. And I think in business, sometimes we think we have a plan, we presented the budget, it's been approved, and we plod along and get underwater. And you can't do that anymore. You simply cannot do that, have that attitude. I look every week, every month at all the key metrics. And if they're moving in the direction I don't like, I immediately say, what's happening? What's going on? Is it sales? Is it pricing? Is it location? We have a heat map which shows what the occupancy rate is by geo. Are people moving from one district to the other? Is the CBD no longer popular? All this data we're beginning to analyze now, which we never did before in the past. And I think that has made a significant difference to how we do something. We over-focused on technology because like a certain very large real estate company called WeWork, oh, I mentioned their name, they thought they were a tech company, a real estate company. We're a real estate company, essentially. We're a real estate asset. We're not a tech company, yet we ended up with 45 people in our tech team building out tech that, basically we're kind of restructuring. And that's how you end up burning a lot of money. We didn't focus on unit economics, which are critical to any business. And I brought that focus back. We looked very closely at unit economics. And again, one of the learnings was that there's more than one market segment. Co-living was started by mostly young people. So the target market was young people who like to partay and drink wine and drink beer and community. There are more segments out there, we've realized. And these segments actually can provide enormous opportunity. We have to find the right buildings for these people, but nevertheless, the total addressable market is actually a very large one if you start to look at the segments that are available and cater to them. So these are things that we learned. And we have to have an adaptable product, and we have to grow in a very conscious way. We can't grow and fling money at everything. So those are some of the things that we're trying and doing. And we think by doing this, we'll be able to make this business quite profitable at the end of the day.
Yeah. And if I could, I was just going to quickly add in about that. How do you create this right balance, get your arm around somebody, making them feel that? I think the learning for me, and some of this I just it happened naturally, but then in reflection, I realized that what's really important is that for new joiners, I spend more time with them than I would have if they were in the office. So every day, like the first 2 weeks you join the company, really regardless, again, we're about 20 people in Asia, so it's not 2,000.
Wow, you have grown.
Yes, we're spending your money wisely though. Every day, there's 30 minutes. I'll have one-on-one with them for the first week to 2 weeks, and then the next will be every other day. And this is just to make sure that they have that opportunity to, raise things up, where if it's all the kind of group meetings, formal, it's kind of suppresses that ability just to have the kind of chat. So I think what's important from a leadership perspective is don't make all your Zoom meetings the same thing. Have some that are structured and formal, have some that are one-on-ones and informal. Get that right balance, because otherwise it's going to stifle the culture and that in letting people feel. And to me, the one is, mistakes don't get surfaced as fast because they get hidden because we're not next to each other. And that's what you got to prevent from happening. So you got to create this ability for folks to, say, hey, I don't understand how this thing works, even if it's the most basic one. So making sure you create that really safe environment. And it's not, okay, we're going to have on the last agenda point, who's going to share the biggest mistake they made this week. It's not doing it in that way.
Right. So I think, again, coming back to being virtual, digitalization, all that's great. Last year, there was a lot of talks about how the whole world's advanced digitalization by 8 to 10 years, something like that. But with that brings about a lot of different hardships as well, right? So, Bruce, Peter, hearing what you both have shared in the last 5-10 minutes, it's very clear that for an employee, communication is very important. And what makes this breakout room very, very interesting is that it is not it's not founders that are representing the companies, but senior management. In your view, does it make it easier as a senior leader, non-founder, to run your team in such times?
Well, I'm not the founder, so I don't have the comparative set, although I wish I was. Does it make it easier? I think that, I'd say one advantage I've got, and Peter, you probably have the same, is that we can come in with fresh perspectives. So that, Matterport's been around for 10 years, but I come into it and I'm trying to leverage the learnings from 10 years, but I'm looking at it with a very new lens. I'm looking at it from a fresh perspective, and I've spent most of my career challenging the status quo, and I guess now I get to do it with a little bit more vim and vigor in my approach, because that will not, the status quo will not work in this day and age. It never did, but now it's like you can't even just give it lip service. Like, it really is a time now where you really gotta challenge your approach, as Peter talked about. Be methodical in the way you do it too.
No, I think exactly what you said, Bruce. I think my advantage is somewhat more unique, because we're also an investor, and we led the B round, and I was sent by the Berda group to look at the business and decide and make a decision as to whether we should invest more money in it, or essentially let it go bye-bye. And we were actually the only investor only a few weeks ago that said, we think this company is viable. Now we've done a round, every single investor has come into the round, because I took them through all the steps that I've somewhat done a high level view of to you guys, and said, here's what we found out, here's what we learned, here's what we did wrong, here's what we're doing about it, and here's what we will be doing. And here's what the cash waterfall looks like. And they said, oh, this makes sense. This is not stupid. And so we're building on that, if you like. And we also, the other big learning was in this business is the ratio of doing master head leases versus management contracts. Because on the head lease, of course, we took all the risk, and we wrote a lot of leases which put us underwater, which we've had to renegotiate. And going forward, we said we need to de-risk, and we de-risk by management contracts. So the mix will change. So we'll move from being 90% head leases I'd say within 3 years, it'll be 50-50. Actually, I don't know what the optimum mix is. That's one of the things that we will try and when we start modeling, because there is an optimal mix, because you have 25% margin on a head lease, you have an 8% margin on a management contract, you have obviously you have capex on the head leases, and whereas on the management contracts you have zero, which is why the spread is different. But we will be looking at what the mix is versus head leases, joint ventures, profit sharing, to optimize optimize this business. I actually don't know what that is at the moment. In fact, we had a discussion earlier today, and we were scratching our heads, or scratching our butts in my case, saying, how are we going to do this? But this is the thinking that we're trying to do in this business, and that's the thinking that I'm doing with this team, and I'm getting, I think, a great response from them.
Yeah, thanks, Peter. I think a lot for our audience out there, whether it's being a founder or senior leader, especially in a startup, there's really a lot of thinking, deliberating, and then questioning as well on strategy, decisions. So, really appreciate Peter and Bruce for sharing, really what's the nuts and bolts behind all that glitz and glamour. Before we wrap up, I always like to end the session with a little bit of a crystal balling. When we get back to pre-COVID, what can we expect from your respective businesses? Bruce, maybe you want to take a stab at that.
Well, I'm not sure what when we get back, what will that look like? Because I think this is all about what what it's going to look like in the future is going to be different than anything we saw in the past. I mean, for us, we look at the real estate is the largest asset class in the world. I think it's been estimated at like $230 trillion, if I'm not mistaken. It's 3 times the size of global equities. There are 4 billion buildings in the world, with less than 1% that have been digitized. So, I mean, for us, and the way we look at this is that building owners, managers, underwriters, investors, occupants, managers, across the entire life cycle of a building, there is just an enormous amount of untapped potential to drive efficiencies, reduce time, improve sales, the whole thing. I mean, 4 billion buildings, less than 1% digitized. So I think, you know, I look at this, Martin, like we're having a hell of a fun time with this. It's going well, but we're just getting started. Like this is the tip of the tip of the tip of this amazing transformation of digitizing the largest asset class in the world.
And I certainly look to hear a lot more interesting stuff happening from you in the near future. Peter, well, you know, I spoke about working from home will not be a thing of the past. I think it's here to stay. Does that mean that there will be increased demand for co-living spaces? What can we expect from Hmlet from here?
Well, certainly we've had to reconfigure some of our spaces for work from home, and we're already going through that, and we're redesigning rooms going forward that have that ability. And that for us means looking very carefully at room sizes, how much space you allocate, the type of tables that you buy for the laptops, the type of common spaces that you used to provide, which were mostly for more recreation. Now they're segregated into working spaces as well as segregation. So that process is ongoing, and I do see, we see work from home, the work from home component lasting well into the future. I think the office is going to come back because the office is a social node. But I mean, people will be working from home at a much greater level than they ever did in the past.
Right.
You know, Martin, when we all got our first smartphones, all of a sudden, you know, it wasn't when you left the office, you left work. You know, that it was the first thing. I look at it now, we just put this on steroids. So not only do we have the ubiquitous internet, the connected devices, but now we're also in a world where our home is our office, where the coffee shop, everywhere is. So I think we've gone from, you know, the internet connecting us to being on all the time to now having spaces and our location being connected into wherever we need to be at all times. So as a workaholic, this is great.
Yeah, I say that I carry my office in my backpack. It's and all I need is Wi-Fi. But the good thing is that I still need to go home every day. So which means that Hmlet will still be very, very relevant wherever the office is. Agree with me, Peter?
We certainly hope so, and I agree with you.
Yeah.
Nobody else does, I do.
Right. And with that, we've come to the end of the breakout room session. Peter, Bruce, I want to thank you for being so gracious to join us and share what's happening with the company, what we can expect. And thank you, all audiences, for staying throughout. Not many questions today, but I hope you enjoyed the session as much as I did. And we'll see you again.
Thank you, Martin.
Thank you all.
Okay.
Thanks, Martin. Thanks, everyone.
Thanks, Bruce. Peter, bye.